203K Loan Secrets webinar. Welcome to the event. I would like now to give the floor to Mr. Jeff Jabora, the Recruiting Director for Allison James. Jeff, are you there?
Yes, thank you, TC. Once again, good morning, everybody, and my name is Jeff Jabora. I am the National Director of Recruiting for Allison James Estates and Homes. Today, we will be presenting information on the FHA 203K loan and the secrets of this and how it can help you boost your business. Before I dive into that and introduce our presenter, I'd like to talk with you for a brief moment about the history of Allison James Estates and Homes. Allison James Estates and Homes was founded in 2008 by James Allison Crumbaugh III. Before that, he was a Prudential franchise owner, and he sold all of his franchises in late 2007, right before he opened Allison James Estates and Homes. He predicted that the internet and mobile technology world would fundamentally change the relationship between brokers and realtors, and that's really what the platform of Allison James Estates and Homes caters to. In just a few short years, we've gained a lot of recognition and gained a lot of headway in the industry. Just recently, our Chief Executive Officer, Matt Crumbaugh, was voted in the top 200 most powerful people in the entire residential real estate industry. We've also expanded our market share quite a bit. We are currently covering 15 states in the United States with just under 800 realtors nationwide. One of the things that attracts people to our business model and also keeps our agents here is the fact that we do pay 100% commission, we do have full-time broker support, and we do have plans that match the levels of production of all agents out there. So if you are further interested in learning more about Allison James Estates and Homes and how we can help you keep 100% of your commission, please do not hesitate to contact me after the webinar. Shoot me an email, a text, phone call, whatever's best for you. I'd be delighted to speak with you. And without further ado, I'd like to introduce our presenter today. As a special guest presenter on the FHA 203K loan, we do have Senior Loan Officer Brian Kazula with Movement Mortgage.
Hey guys, this is Brian Kazula here in San Diego, California. I am with Movement Mortgage, and today I'm going to be talking about the FHA 203K loan. And what I'll do is just jump right into it, so I'll advance to the next slide. Sorry about that, looks like there's a little bit of a lag. So today really what I'm going to be talking about is what the FHA 203K loan is and how it works, why you need to know about the FHA 203K loan, and how the 203K loan can help you sell more houses. I'm sure many of you have heard about the program in the past but really haven't worked with it or haven't worked with it as just as a streamline as we can really do it. So sorry, I'm picking up a little bit of a delay here. So what the 203K loan is the FHA 203K loan home program is available for homeowners or owner-occupied home buyers to purchase a property or refinance it. The idea is to bring up a property to meet minimum FHA standards or to improve the property. So that's really the key here. There's two things that you can do with this loan. So you've got a product that will allow you to rehab a home. So either to take a property that doesn't meet FHA's health and safety standards and bring them up to meet that level of occupancy or health and safety standards. The other thing that you can do is you can take this loan and you can rehab the property. So you can go into a home that is outdated. It's got old cabinets. It's got, still the shag carpet from the 1970s, whatever it is, and really modernize this property. So the FHA 203K loan is a rehab loan, and it's available for owner-occupants to either refinance, they needed to refinance a loan, or to purchase it and bring it up to the standards that they're looking for. So why do you need to know about the FHA 203K loan? So a lot of the properties that we've seen transition over the last couple of years were foreclosures, they were short sales, and those properties really did dominate the market. Not so much anymore, but that's what was going on. So the guys that own these properties, they didn't fix them up. The banks were selling them as is, so we have a lot of dated homes, not just here in California, but really throughout the country. And this leaves a lot of opportunity for buyers to come in and fix them up. At the time, you know, the sellers didn't have the cash to come in and improve these properties to boost the price of them. And then we've seen home equity loans of credit all but disappear for homeowners that didn't have a lot of equity in their properties. Back in 2004, let's call it 2002, 2003, we were doing the 80-10-10s, the 80-15-5s, the 80-20s. Borrowers could get the additional funds to fix up the properties after close of escrow. What we're seeing in today's market is after clients close escrow, they're using their credit cards to finance these repairs in the property. And you know, you don't want your buyers to purchase a property, get in, they're already going to be leveraged because they probably have a payment higher than they're used to paying ever before, especially if they're renters. And now they're trying to finance the repairs of the property using their credit cards. That's not bad for small repairs, $5,000, maybe $10,000 at the max. But as soon as you start getting beyond that, it really has a negative impact on the borrower and their, you know, just day-to-day lives, because now they've got high balances on their credit cards and their credit scores end up tanking immediately after purchasing a property, and that's not what we want. I've had clients that have come back to me and they're looking to refinance out of an FHA loan 6 months later, 12 months later, but because they went out and put $30,000 on a credit card to fix up their property, they can no longer afford, they no longer are able to do that refinance. And that's what we're trying to avoid with this program. So how is the FHA 203K loan going to be a crucial product for your business in 2014? Well, really, this is going to allow you to get out in your neighborhoods and look at properties that your buyers may not, you know, they may not really like. You know, they're going to go into this home, they love the neighborhood, but for whatever reason, the property's outdated. You know, they walk into the bathroom and they're like, there's no way we can move into this property with the bathroom like this. It's just not going to work, and we don't know how we're going to be able to fix it after we close escrow, so we're going to have to look at another property. Well, this gives you the opportunity to take that same buyer and say, okay, I know this property doesn't meet your exact needs. It's got an outdated bathroom. It's got an outdated kitchen. You know, the carpet needs to be replaced. You need new baseboards. Whatever it is, you can say, well, now you can do this, especially if your borrowers are already going to use the FHA loan. So the way this product works in a nutshell is it's going to be the same way that a standard FHA loan works. So the borrower is going to be required to put a minimum of 3.5% down. And the cool part about that is that can be all gift funds. So 3.5% down, and typically that's on the purchase price of the property. So let's say they're purchasing a property for $300,000 on a traditional loan. They would have to put the 3.5% down on that $300,000. Let's say they come in and they decide to do the FHA 203K loan. They're still going to put the 3.5% down, but it's going to be on the after-repaired price. So let's say $300,000 for the purchase price and then $20,000 for the repairs. So they're going to put the 3.5% down on the $320,000. So really not that big of a deal, and they're able to finance the $20,000 in repairs. So this is a loan program that's going to allow you to take the buyers that have specific requirements and really, I don't know, just get them into a property. And we're not just talking about minor repairs, carpets and cabinets. You can add additional bedrooms. You can add a second story if you like. So I'll just go ahead and move forward. There's going to be two types of FHA loans or FHA 203K loans that your borrowers can qualify for. There's the Streamline. So the Streamline is a great option if you get into a property that needs minimal repairs. And the key here is non-structural repairs. So the non-structural repairs are going to be your cabinets. They're going to be your dishwashers, microwaves, refrigerators, your tile floors. You can't move any walls. You can't add second stories. You also are going to be limited to $35,000 in total repairs. You're not going to be able to use that full $30,000 because we have to set up a contingency reserve. So really estimate about $30,000 total. The other key item here is you're not going to be required to use an FHA 203K consultant. However, I would highly recommend that you do, and I'll talk about that in just a second. So now on the full 203K loan, there's no limits to repairs. You can add the second story. You can add the additional bedroom. You can make the structural changes that you need. The biggest deal is you are going to be required to use an FHA 203K consultant, and this is critical. So the FHA 203K consultant is just like a home inspector. However, he's going to guide the process. He's going to let us know what we need to add into the property to bring it up to FHA minimums. And the reason why I'd request or highly encourage you to use one, even on a Streamline, is because you want to make sure that you're not doing the wrong repairs. You don't want to get a list of the repairs from the contractor, get the appraisal back, and you still need to double strap the hot water heater and do a number of other items. You might as well have that taken care of at the same time. So the other very cool thing, and the secret that you need to know on this loan itself, it really has to do with the appraisal. So we are coming in, and last year was a perfect example up until about August, that we were really in a hot market up until like August. I said it stalled out a bit, where we saw here in San Diego 25 offers on every single property that went on the market, 40 offers. So the values were getting bid up very quickly. And the sellers and the listing agents were very hesitant to accept any offers above the listing price, or they wanted to, but they were concerned about the, let's say, the appraisal on it, and if the buyer had enough cash to come in if it didn't appraise for value. Well, this is a loan that you could use to your advantage in this situation. There is a 10% variance that FHA allows on the 203K program. For example, you're purchasing a property for $300,000. It gets bid up to $310,000. The listing agent's concerned because they don't think it's going to appraise for $310,000. You tell them not to worry. You're going to use the FHA 203K loan. You're going to do a minimum repair of $5,000. You're going to go in and you replace the carpet. You're going to paint the walls. So now you've got a total purchase price of $310,000 plus the $5,000 in repairs. You order the appraisal. The appraisal comes back at $300,000. In a typical transaction, the deal would be dead. The borrower probably is going to come down with a $10,000 difference. Maybe the buyer will split it. You just never know. With a 203K program, because we have that 10% variance, we could have gone up to $330,000. The appraisal came in at $300,000. We have a 10% variance. We could have gone to $330,000. We only needed $315,000, so we're good. The buyer got the property that they wanted, they did the repairs, and the seller got what they wanted for it. So that's the real secret in this program, when we're looking at a market that's increasing in value, and we're also looking at dated properties. So the FHA 203K program, excellent opportunity for your buyers that are looking at older homes or homes that just need renovation in general. I'm going to go ahead and go through a couple of slides. You guys have all seen Flip This House, so you know what they look like, the before and afters. Clearly, these are not in San Diego, maybe up in Big Bear or something like that. But you can see you can go in and you could paint the walls, you could add hardwood floors, just a number of things you could do. You could fix up the fireplace. The key thing for a lot of folks is redoing the bathrooms. You could go in and you could take a single, sink in the bathroom and add a dual sink vanity. You could replace the tub. You could do a brand new shower. You could do tile. You get it. You could replace that toilet. You've seen it. Some people like the round ones. Some like the long ones. Who knows what it is? The kitchen's another key thing. Really, you could come in and you could add granite countertops, quartz countertops. You could do brand new cabinets, tile floors, microwaves, vents, ovens, refrigerators. I was on the phone with a FHA 203K consultant last week, and we really were diving into the energy efficiency programs. So this is another big area in California where we have rebates that are going on with SDG&E. The state has rebates. So when you bring in that FHA 203K consultant, you can ask him, in addition, if he does the energy ratings on the property. If so, you could do some of these energy repairs. You could add in the dual pane windows. You could add the Energy Star appliances. You could have them test the property. This will further add value to the property when they go to resell it in the future, knowing that it's got a good energy rating on it. So one of the things to look at. Now, if you think your client may need an FHA 203K loan, you know, really the first thing to do is, if you've got any clients that are looking at putting 3.5% down, they're looking at doing an FHA loan, then that client really could use an FHA 203K. And it's in your best interest to let them know that that is an option, that it's out there. So anybody that's looking for an FHA loan, for that matter, anybody who's looking at even putting, let's say, 5, 10, or 20% down on a property, and they're looking at dated homes that they'd like to fix up. Because why not take that FHA 203K loan, even for a buyer who can put 10% down on a property, do the repairs on it, and then have them refinance into a conventional loan in 6 months, 12 months down the road. So literally, you're just using the FHA 203K loan as a way to rehab the property without having to find additional financing. You know, you don't have to go onto your credit cards. So the first step is to partner up with a professional. Certainly, any of the loan officers at Movement Mortgage can help you out. I'm down here in San Diego and licensed throughout California, and I can certainly help you. If you're in a different area, you could reach out to Jeff, and he could get you in contact with me, and I could certainly find a partner in your area. The other thing that I would recommend is when you're talking to your home inspectors, you're working with home inspectors every day, you might as well ask them if they are FHA 203K consultants. Chances are they're not going to be, but they're going to know one or two in the area that you live in that are. So go ahead and get those people, put them in your phone, your contact list, so you know who to call. So when you go to order that physical inspection, if it's going to be a 203K, you're just going to order it through them. They'll do the physical inspection, and they'll also act as a consultant. It will ultimately save your buyer money. And then second step is easy. Just help your clients find their dream home, or the home that, you know, can become their dream home. So this is the big thing. How long does it take to process these FHA 203K loans? And if you've been in the business for a couple of years longer, you know that in the past, the FHA 203K loan, people did not even want to look at. You had the larger national associations that did them, but they were very specialized groups that did them. And they did them very poorly, in the sense that by the time they were completed with a transaction, it was like brain damage. And nobody was happy. It was a very bitter closing because they took 60 days, 90 days, 120 days, whatever it was, just because there were so many hiccups throughout the process. This is where we really come in and we can streamline it. Movement Mortgage is a mid-sized mortgage bank. The owners of our company came from a background of reverse mortgages and the FHA 203K program, along with other niche programs. So they really understand the product, and their goal is to close these things in 30 days or less. So literally, I don't want to, you know, it says 9 to 20 days. It's because we have done them in 9 days. 20 days is more average, and to make that happen, it's critical that we hit the ground running. So if you find a property and you're going to go into escrow on it, or you know you're going to get an accepted offer on it on Monday, why not have the borrower contact his contractor? And if the borrower doesn't have a contractor, have them contact me, or maybe search out contractors in your area that are familiar with the program so that you can plug them in right away. Because here's the thing with contractors, is they're busy. They always have lots of jobs. So you know if you've got a client who's thinking about doing a 203K loan, you're going to want to contact the contractor ahead of time and say, hey Tom, I've got a project coming up. My borrower is looking to go into escrow on a home in the next 30 days. Would you be available to do the bid? So the bid is the huge thing on these. The day that property goes into escrow, or as soon as you know it's going into escrow, get the contractor out there, have them do a detailed bid on the property so we can really dial it in. We're going to want to need to, or we need to know, if he's going to redo the bathroom, What is he doing in the bathroom? Is he doing new vanities? Is he doing a new mirror? Is he doing a new bathtub? And if he is, he's going to have to break down each individual line item. You know, what is the bathtub going to cost? What is the shower enclosure going to cost? What is the new toilet going to cost? And the contractors typically have their format set up already, so they just plug it in and they can do a very detailed bid. I've had issues in the past where a contractor came back and handwritten an estimate on a carbon copy paper. You could barely read what was on there, and it wasn't broken down line item by line item. That contractor wasn't familiar with the process, so we had to bring him up to speed really quickly so that we could stay on track. I've also had a situation, this was in December, we had an FHA 203K loan. It closed on time, but during the bid process, the buyer wanted to get 4 or 5 different bids and didn't like any of them. We brought in another contractor, he provided a bid, and we got it done. So you really need to have that conversation with the buyer saying, you know, you need to know who you're going to use or have a pretty good idea of the contractors that you want to use so that when you go into escrow, we can really hit the ground running. Then, as soon as I get that detailed bid, let's say the contractor goes out there on a Friday or Saturday, the transaction goes into escrow on Monday, I'm going to take that bid, I'll probably get it back on Wednesday, and I'm going to order the appraisal as soon as I get that bid back in. Because you have to realize, even though it's a 203K loan, the sellers don't care. They want you to close in 30 days. You're still going to have your 17-day contingency period. So as a loan officer, I'm going to be pushing to get the transaction done. Now, it's doable, and you know, we're closing them every day this way. It's just we really have to have everybody lined up, and that's why it's critical to use a FHA 203K consultant as well. That way they can work with the contractor and say, okay, you need to add in, you know, like I said before, the hot water scraps, the carbon, you know, the smoke detectors, everything else that a property is going to need. Not going to be able to have any loose wires after it's completed. So our process at Movement Mortgage is a little bit different than a lot of lenders. What we'll do is we'll take the loan application, and ideally what I want to do is I want to take the client and get them fully approved before we submit them into escrow. So this is very important, especially on a 203K loan. We want to know that the buyer doesn't have any issues. So as soon as you refer that customer to me, I'm going to take them, I'm going to ask them for all their supporting documents, I'm going to run DU or LP, and then I'm going to submit them into underwriting. And that's without even having a property. So I'm going to take these guys and I'm going to get a full underwritten approval. And our underwriters are graded and paid to get files underwritten within 6 hours. So let's call it 6 to 24 hours. We're trying to get an underwritten decision back. Once we have that underwritten approval back, we're going to submit it to our processing department. And our processors are paid and graded to have the file cleared to close within 7 days. What that means is the buyer's conditions are going to be met just as soon as possible. That way, once you find a property and you go into escrow, whether it's a 203K or a conventional loan, we know that the borrower's set. We just have to get that appraisal ordered, the purchase contract, escrow instructions, the prelim, and we're off to the races. We can really get the process moving forward, so a jump start on it. And really, that's it as far as this presentation goes regarding the FHA 203K loan. The main takeaways that I want you to have is I want you to remember that the FHA 203K loan is a rehab program. And if you've got an FHA client, you might as well, you know, introduce them to the program anyways. The second takeaway is the appraised value. We're going to allow up to 110%. There's a variance of 10% on it. A big secret. And then lastly is we can close these loans quickly. If you've got a listing agent that's concerned about taking the offer and you want me to have a conversation with them up front, I'm more than happy to. If it's a property that you're concerned about, I'm more than happy to drive down, take a look at the property to make sure it's going to fit. If you don't know if it needs to go a rehab loan or just a standard FHA loan, same thing. More than happy to go down and take a look at the property to see what it looks like. Now we're going to go ahead and open it up for questions and see if I can answer any questions for you guys.
Okay, and this is the moderator. A quick review on how to get a question submitted. On your right, there's a control panel. You click that button. The little arrow button, and it'll minimize and maximize. And what you'll need to do is either type in your question in the question box, and I will read the question and do my best to give it to Brian so that he can answer it live here. Or you can raise your hand, and I will attempt to activate your microphone so that you can ask Brian directly. So one moment while I queue up questions. Okay, Brian, Rick Tibbetts asked, I thought you couldn't refinance out of an FHA loan for 5 years. No?
No, I think what you're confusing it with is on an FHA loan, in the past, you couldn't remove the mortgage insurance for a minimum of 5 years. The FHA loan has no prepayment penalty or really any restrictions. So what I end up doing with a lot of clients that take the FHA loan, whether it's an FHA or an FHA 203K, is we'll revisit their value every 6 months. And as soon as they hit 95% financing, 90% financing, we'll run the analysis and see if they could refinance out of it. I have a client right now that we're taking from a FHA loan to a conventional 15-year fixed. His payment's going up by about $100, but he's going to pay it off that much quicker. So you could refinance anytime.
Okay, and forgive me if I mispronounce your name. Pat Schnick, does it matter who does the repairs? Can the buyer, if they are in construction?
So good question, and the answer is going to be no. So you may find some lenders out there that will allow the borrower to do the repairs if they're a licensed general contractor. I'm going to say that's not something that we're going to allow. The borrower is going to need to use a licensed contractor to do the repair work on the property.
Okay, and again, I apologize if I mispronounce the name. Kuldepek Gosnway, do these improvements have to be completed before the close of escrow? How does the lender ensure that funds are being used for upgrades and repairs?
That's a great question. So no, and that's the beauty of the program when you're talking to the listing agents. You close escrow, the seller gets paid for the property, the agents get paid for the transaction, and then the bank works to ensure that the repairs are completed. The way that we do that is we initiate 2 draws on a Streamline, and then we order a reinspection of the property with the appraisal or appraiser after the repairs have been completed, and then we'll do a title update at the very end. So that's on a Streamline. On a full, we'll have a 203K consultant involved, and that's part of their job, is they'll oversee the draw periods. There's up to 5 draws, and the 203K consultant will approve the draws. At the end of the transaction, we'll sign off on the repairs, and we'll do a title update.
Okay. Marla Zanelli, her question is, what is the maximum loan amount?
So that's going to depend on your area. FHA just changed their loan limits here in San Diego to $625,500. If FHA goes higher or lower in your area, it'll be adjusted. And the cool thing about this loan that I didn't touch on is you can do units. So the borrower could actually purchase a property, a duplex, a triplex, or a fourplex, use the rents to offset the mortgage payments to help qualify for that larger purchase price. And the loan limits increase depending on how many units are in that property. So again, 625.5 here in San Diego, it's just a great opportunity. The one that I closed in, I want to say October, it was a purchase price of $540,000 up in Escondido. The borrower did $35,000 or $30,000 in repairs. So just a great program for them. The other cool thing about the product, you could actually take a 5-unit commercial property, use the FHA 203K loan, convert it into a fourplex. I don't have the limits in front of me, but I think it's like $1.5 million. So a great opportunity if you have someone who's looking at really getting a jump start on their, let's say, real estate holdings. Just know that it does need to be an owner-occupied property.
Okay, Rick Tibbetts, his question is the buyer required to use the contractor who submitted the bid?
You know, that's a very good question, and the answer is yes. Otherwise, it creates a whole host of problems down the road. Because after close of escrow, we're working with that contractor, we're releasing the funds to them, and we've got a series of documents that the contractor has to sign. We also have to do a background check on the contractor to make sure that they're in good standings, they've got proper insurance, they've got solid references. So we have run into problems when the owner fires the contractor midway through the job. So yes, they would need to use the contractor that provided the bid. So you have to use that contractor throughout the process. Otherwise, we'd have to get another bid. If something arises after close of escrow and they have to change contractors, it's something that we can accommodate, but it's you know, it's like changing any other condition in a loan. You know, it adds a bit of a headache to everybody.
Koldepak Guasmwe, her second question is, does the borrower have to use licensed contractors to do the actual work, or can they use handymen for smaller portions of the job?
So yeah, it depends. So on the Streamline option, you know, Lowe's and Home Depot have a great program set up where you can literally go in and order refrigerators, microwaves, dishwashers, the carpet, and they'll provide you with the estimate, the detailed estimate that we need, and that's fine because they'll be installing the work, and my guess is these individuals are not licensed contractors. So it really depends on the scope of work that you're doing.
Marla Zanelli, does the buyer have to stay in the house for an extended period of time?
Well, the intent is to own or occupy this property. So you will want to have the intent to live in the property for, let's say, a year. If something comes up in 6 months, 9 months, and you need to move to a different area, there's no penalties if you need to move, but truly your intention needs to be that you're going to own or occupy this property.
Don Betts asked, explain the draw process again, please. How work is done after closing.
Yeah, so on a Streamline option, what happens is at close of escrow, there's a portion of the proceeds that are released. This is on a Streamline that get released to the contractor. So the contractor that you work with needs to know that they're not getting the full, let's say, $30,000 the day the property closes. They're going to have up to 2 draws. And I believe the first one, I'll have to check the numbers, but I think it's 65% maybe is what they're released on the first draw, and that typically takes place 3 days after close of escrow, just because it takes escrow that long to, close, record, and then disperse the funds. After the work's completed, then they'll get the remainder of the funds once the appraiser goes out there and he does his follow-up re-inspection. They'll get their remaining funds. Now on a full 203K, since it's a little bit more involved, there's a FHA 203K consultant involved, and that 203K consultant will authorize the disbursements of the draws. So he'll go out there and he'll say, okay, the kitchen cabinets have been installed, we'll release $5,000. The carpet and baseboards have been done, we'll replace another release another $4,000. And that'll go on throughout the process. Now on the full 203K loan, there's a total of up to 5 draws. And the draw periods can be for no longer than 6 months, meaning the work needs to be completed within 6 months. Now during that 6-month period, the buyer can actually finance they'll finance their finance charges, their interest on the loan, because on a full and even on a Streamline, you're not going to be able to move into this property right after close of escrow. But on the full 203K loan, that's one where you can make structural repairs. You can finance up to 6 months worth of finance charges.
Fred Blitzer asked, is the 110% the amount given if the appraisal comes in low?
So yeah, so that's exactly what happened on the transaction that I had last month. I don't have the exact numbers in front of me, but we were doing a total of, I want to say it was like, let's call it $370,000 was the repair work plus the purchase price. The appraisal only came in at $350,000. So the appraisal came in at $350,000, So we were okay because we could have gone to 110% of that. So $385,000. So even if it goes beneath the purchase price, you're okay as long as it's within that 10% variance. So in the scenario I used earlier, you could have, even if it came in at like 300 or 290,000, the transaction still would have worked. So it would have had that variance.
Barb Gray asked a clarifying question about the appraisal. 110%, do you mean it is appraised in as-is condition and then the loan can be raised no more than 10%? Or are we talking after repair value?
We're talking after repair value. This is the same as a construction loan. So if you go to a builder and your buyer goes to ISI or interior specialist and they pick out $40,000 in upgrades, they're doing the appraisal based on a $500,000 purchase price and then that $40,000 in upgrades. So it's the after repair value.
Okay. This question from Susan McKinney, I believe, has been answered, but I'll give it to you to be sure. Susan McKinney asks, does the loan monies stay in escrow until repairs are done before closing?
No, the repair funds don't actually go to escrow. Escrow's finished with the transaction as well the day that it closes. It's actually a department of the bank that handles the disbursements. So the borrower on a Streamline would actually complete the paperwork, submit it, and we would disperse the funds on a Streamline. And then the 203K consultant would complete the paperwork and submit it to us, and we would release the money. So we handle the disbursements.
Susan Hendrickson, her question is, if it is a full 203K and we're doing if it is a full 203K and doing an addition, can it be freestanding like a mother-in-law suite that is freestanding on the property?
Really it would depend. I would have to check on that. I mean, I want to say it depends on the zoning of the property. Are you able to build a separate unit on the property itself? I would think that if that was, if it was okay with zoning, I don't think we'd have any issues with it. If it was standard for the area and if there's no problems, then I don't think it would be a problem. But I would have to follow up on that. Sorry about that.
Michael Garcia asks, what is the maximum on a full 203K repair allowance?
Well, really, there's no maximum. I mean, you could do whatever you want to the property. You could level it, take it down to the foundation, and rebuild it. Where you're going to be held up is the appraised value, because you still have to get the appraisal on the property, and the appraiser is going to do it based on after improved value. So if you over improve it, or if the demo cost plus the repair cost exceed the 110% appraisal, then you're going to be limited. So it just depends on the individual property. You don't want to go into a property and say, okay, I'm going to put a $100,000 kitchen into a $300,000 condo. That's not going to work unless, for some reason it appraises. So it all depends on the appraisal.
Robert Dobbs asks, is there a minimum total loan amount that you accept in a 203K loan?
A minimum total loan, so loans plus repairs. I would have to check with the minimum loans. I haven't really come up across that in San Diego. Most of the ones I do are right around $300,000. Well, actually higher than that. I would say I would have to check on that. If you're looking at property that's $80,000 or something like that, we would just have to see if it was a loan that we could do. You could certainly send an email over to Jeff or me directly, and I'll follow up on that.
Dana Johnson asks, if someone is already approved FHA, will they need to get reapproved for a 203K?
No, not at all. I mean, it's the same loan. What they would need to make sure of is that they're approved for that loan amount. Because remember, they're getting approved for the same essential loan with the 3.5% down. A lot of times clients will get pre-approved for, let's say, $350,000, and they'll be out looking for a $350,000 property. If then they want to go and add $50,000 in repairs, then we'd have to increase their approval above that, and then we'd have to see if they'd get approved for that amount. So the answer is no, unless they're trying to go above their maximum pre-approval amount or approval amount.
Rex Planter and Barb Gray share the same question. How much does it cost to hire an FHA consultant?
It's going to depend on the area, and that's something that I didn't really touch on in the presentation, was the actual cost of the FHA 203K loan. You know, in San Diego, I'm going to say home inspectors typically run about $400 for your standard home inspector. The 203K consultant said, when I talked to him, he was like $550, so he's like $150 more. It wasn't very much. So that's why I recommend hiring the home inspector and the 203K consultant being the same person, is because if the home inspector is $400, the 203K consultant is going to need to make something, so he's probably going to charge a premium if he's not doing the home inspection, so it'll probably be another $400. But if he does it all at once, he's probably closer to $500 or $550. Now, regarding the overall closing cost on the transaction, they're not really that much higher. They're maybe $500, $600 higher on an FHA loan or FHA 203K loan. The interest rates are slightly higher, but again, not that much, maybe an eighth of a point. So it's a very affordable product if you're looking at FHA.
Barb Gray, her question is, quotes, no luxury items, question mark. What is the definition of luxury? You mentioned granite and hardwood.
You know, I agree with you. I've seen that it's in there, but you know, to be honest, I don't know if they're looking for luxury. Maybe brass fittings for you know, I don't know, for the sinks. You know, I don't know. Everything that I've seen to put through works. You know, stainless steel washer dryers, granite countertops, brushed nickel faucets. You know, the nice shower heads. So, you know, I would have to get back to you. It would have to be something probably over the top, maybe like a jacuzzi. If they were trying to add a jacuzzi into the property, you know, I don't think that would work. If they were trying to add a swimming pool in the property, I don't think that's going to fly. Now, if they had to repair the swimming pool, I believe the repair is up to $1,500. I'll have to check on that, but I'm thinking they're looking at like jacuzzis, steam rooms, saunas, things like that.
Rick Tibbetts, do the repairs have to happen within 6 months of closing?
Yes, they do. So we're going to want to get the process started immediately after close of escrow. You don't want to have a property that's just sitting there, because we need to move on with the loan, fund it out, and get on with servicing. So on a full 203K loan, you have to get it completed within 6 months.
Jeff Bender, how do you become a FHA 203K consultant?
You know, I'm not too sure about that. You could probably look on HUD's website. So I would say check HUD's website and see if they have it on there.
Octavia Romalo, yes, we are going to email this presentation and a video recording. One moment while I queue up the next question.
And then, you know, I want to also answer the other one regarding becoming an FHA 203K consultant. If you go down that path, I'd also recommend that you get your energy certificate, just because you'll really be able to add additional value to the buyer and to the property.
I believe that you've answered this one, but I'll give you an opportunity to confirm. From David Reyes, is there a max repair amount for the program?
Yeah, so on the 203K on the Streamline, it's a maximum of $35,000 total, and that includes contingency. So really, I would cap your repairs at $30,000 for the Streamline, and then for the full 203K, there's really no maximum as long as the property is going to appraise.
Okay. Marla Zanelli, in buying units, does the buyer have to live in one?
Yes, this is for owner-occupied loans only. Now, we do offer another home-style renovation program that's for both owner-occupied and non-owner-occupied, but that would be a different webinar altogether. But on the FHA 203K loan, it does need to be owner-occupied.
Sharon Johnson Smith, did I understand you say that walls cannot be knocked down, question mark? So if a buyer wanted to make a section of a 3-car garage into a bonus room or bedroom, it can't be done? Question mark.
On a full 203K loan, you could absolutely do that. And there's really no difference between the full and the Streamline except you have to bring in a 203K consultant. So yes, you could add a bonus room. You could add a second story. You could add several extra bedrooms. It would be no problem.
Deborah Cummings asked, what recourse does the buyer have if they are not satisfied with the workmanship or time frame of the contractor they chose?
That would be between the buyer and the contractor. Again, strictly the bank is lending the money. That's why we can recommend contractors, but we can't require them to use any one, because if a dispute arises in the future, that's between the buyer and the contractor.
Brian, Jeff Bender and several others have asked, what is your contact information?
You know, it'll be on the, I think on one of the slides. I think it's on the beginning slide, but you can always give me a call at 619-203-5938. And my website's really easy. It's just briankic.com. So briankic.com. And we'll get that information out to you as well.
Okay, one moment while I queue up the next question. And we, and I'll also pause to share this. We are at 1:50 Eastern Time, so we only have about 10 minutes left. And as far as questions, I am at the last question came in at 1:36, and I'm doing them in the order that they were received, and there are dozens more. So it's unlikely that we'll be able to get to them all, but we will do our best to get answers for you and respond through email if possible. Next question from Pat Schnick. Can a contractor apply to become a preferred 203 contractor? If so, what is the criteria?
No, they don't need to apply. I mean, if they're in good standings, they could take a 203K loan. So there's no application process as far as getting approved across the board. It's just when they fill out the paperwork on the individual loan, we are going to check their insurance. We're going to check their references to make sure that they're in good standings.
Susan McKinney, what is the time limit given to contractors to complete work?
Well, it's going to be 6 months on a full 203K loan. On a Streamline, I'll have to check the exact, it may be 6 months as well, but I think it might be a little bit shorter. Typically on the Streamlines, I've always seen them, they're completed within a month, maybe a month and a half. It's just a real fast process because it's a limited scope of work.
Okay. And I apologize if I mispronounced the name. Mihir Mohabi. At first the buyer has a FHA loan. After he found the property, can the loan switch to 203K? Is there a process for that?
Yeah, that's no problem. We would just adjust the terms of the loan and make it a 203K. In that case, I would definitely recommend talking to the seller. In that case, you've probably already spoken to the listing agent and seller because there's issues with the home that need to be addressed prior to closing. So you would just extend out the timelines a little bit so they could get the contractor in there to give the bid for the repair work. But you shouldn't need that much additional time, maybe an extra 5 days or so.
Dottie Greco. How many total appraisals are conducted, and what happens if the property still doesn't appraise after repairs?
Well, really, you only have one appraisal. So the appraiser that's going out there is doing an after-improved appraisal on it. So that initial appraisal tells us what the value is going to be after it's been improved. The re-inspection is simply for the appraiser to go out there and check off the repair work that's been done. So we need to see that if they said that they were replacing the carpet, that the carpet was replaced. If they are replacing the kitchen cabinets, he's checking to make sure the kitchen cabinets have been replaced. So only one.
Okay. Jeff Bender, 3.5% down on after repair value or pre-repair value?
It's after repair value. We're going to loan 3.5% of basically it's the total. So if they're putting, if it's a $300,000 property and they're doing $30,000 in repairs, we're going to do 3.5% on the $330,000. So that'd be $11,500 they'd have to put down.
Okay. This one is this next question is a long one, Brian. I'm going to do my best to read it, and I think you'll have to interpret some for me.
No problem.
But it comes from Barb Gray. If you do a Streamline loan, and you factor the cost to be $30,000, but the actual cost of improvements came in at $25,000, is the final loan amount adjusted down, or do they have to spend all $30,000?
No, they would get the refund of the additional funds, so it'd be applied back to their mortgage at the end. Because we're going to hold a contingency as well, so that's why I say $30,000, not $35,000, is because you're going to have some contingency in there. So once the loan's completed out, any additional funds that are left over will just be applied back to the mortgage.
Okay. I believe you've answered this one, but I want to give you an opportunity to clarify. Are there extra fees on the loan?
There are extra fees on the loan, but they're relatively nominal. You're going to have an additional title search of $150. You're going to have a supplemental origination charge, which I think is right around $650. You're going to have, if you use a 203K consultant, you're going to have their additional fees. So there is additional fees, but it's not really that much.
And we'll close with this one. Hope Lakener, can you please explain owner-occupied as it relates to buying units?
Sure, that's pretty simple. The borrower just needs to live in one of the units. So if he buys a fourplex, he just needs to owner-occupy one of them. And the really cool thing is he could take the rents from the other 3 units. Let's say it's $2,000 per month for each of the units. That's an additional $6,000 that he could, well, he'd have to use 75% of that, but 75% of $6,000 that he could use to offset his overall mortgage payment. So pretty cool. But he would need to owner-occupy one of the units.
There's a follow-up to that one. Is there a maximum number of units allowed?
Yeah, so any residential property for residential lending purposes is 1 to 4 units. You could take a 5-unit property and convert it into a 4-unit property if you wanted to. So if you found a commercial property that would make a great residential unit, you could convert it over using this program. And that's a real opportunity in some of these infill areas. Maybe downtown San Diego about 8 years ago when they were converting a lot of the lofts or old brownstone buildings.
Okay. And Brian, before we transition to Jeff to allow him to give the closing remarks for the day, I'd like to give you an opportunity to offer any closing remarks as well.
Yeah, I just want to say thank you guys for joining the call, and I hope I was able to answer any questions that you have. Feel free to reach out to me. My email's on the screen, and we'll send it over to you. I'm always happy to answer questions regarding the program. It's been one of these loan programs that is definitely underutilized in the market, and I think it's a great opportunity for you to pick up a couple of extra transactions this year, and then certainly tell your clients about it and see if it's something that they could help with. So feel free to give me a call or reach out to me if I'm not in your area. If you're outside of California, I could certainly refer you to a loan officer that could work with you.
Okay. Thank you, Brian. And Jeff, we'd like to give you an opportunity to offer any closing remarks for the event itself.
Absolutely. Once again, everybody, thank you so much for tuning in today. I think that was a great informational session about the FHA 203K loan, and thank you to Brian for joining us today. Once again, here's my contact information if you are interested in more information about Allison James Estates and Homes. We will also send out a recording of this webinar for you to refer back to that will have my contact information as well as Brian's should you need to get a hold of any of us. And we look forward to seeing you next month for our next webinar.
Well, thank you, everyone. And as Jeff said, the recording will be sent out shortly. It's been a pleasure to work with Brian and Jeff today, and I hope you all have a good day. Goodbye.